Okay, so we now move on to the section on private securities. When we think of private securities, we're talking about securities that aren't listed or actively traded. Most people think about private equity, but this section does talk about private debt investments as well. But let's start with private equity. Private equity is investing in the shares of a company that has not got a public listing. So these companies are pre-IPO, if you like. Now, it's important that you realize in this private equity universe, there are three stages, if you like, or three sizes. Brand new companies are regarded as venture capital. Established companies are regarded as a private equity buyout. And in between, you've got growth equity. Now, we've left the growth equity column here for your own delectation. Ideally, you should have this frame of reference broadly. You should be able to broadly line up how VC and buyouts compare. Growth equity sits in the middle. The curriculum itself says that the delineation between venture capital, which is a brand new startup company, and growth equity, which is a company which has been running but needs capital to grow, the exact delineation between these two stages, if you like, or these two types of private equity investment, is not massively well defined. These growth equity companies, they're not new, so they are established, like buyouts, okay? And their revenue is 25 million or so, like buyouts, 25 million plus. So where's the difference? Well, focusing on the difference between growth equity and buyouts, with growth equity, we don't take control. With buyouts, we take control to reposition the company, to restructure the company. We take control with large amounts of debt. With growth equity, we don't necessarily use that large amount of debt, and we tend to take a minority stake. So we're a significant investor, but we're not taking control. That's one difference. And we're trying to expand the business rather than reposition the business to grow earnings. All right. So the business is fine. It just needs capital to grow and encouragement to grow, rather than here with buyouts, we tend to have an idea as to how we can improve earnings growth through increasing efficiency or changing the focus of the company. Growth equity slightly longer than buyouts, but not as long as VC. So sitting in the middle there. Sitting in the middle here with regards to potential upside, middle risk. So think of it as a middle play, all right, between these two. And target IRRs can be quite high in the middle again, and in the middle again with regards to risk. So yeah, try and place growth equity by really how it compares to buyout. We've got established companies, but we're not taking control. That's the way to think about it. All right, next up, we're going to discuss the 5 stages of financing a VC firm. Now, with the multiple choice exam, which CAIA Level 1 is, you don't have to write these things down on a blank piece of paper, but it's a useful exercise for you to do so because you need to recognize these things. Now, this is a VC firm. A VC firm is brand new, all right? And maybe the extremities of these financing stages of a brand new pre-IPO firm, maybe they're the more obvious ones. Right at the start of a company, you've got the angel investors, all right? The angel investors are friends, family, and fools who are putting their own capital and their own sweat into a brand new idea. Something to note here in the description is alpha testing occurs here. So there isn't a product, it's really proof of idea. So it's proof that the product can work, or designing the product. All right, we're not testing the product by sending it out to customers yet. That happens at the next stage. So beta testing, when we send the product out to customers for free or heavily discounted in order to test it, that's the next stage. And in order to reach the next stage, you need seed capital. Okay, we haven't yet started running our business properly. We've got a product, we're sending it out to customers and potential customers, beta testing it, and we need the seed capital to set up our business essentially. So we'll be essentially establishing a business plan here. So the company isn't officially in existence yet. It's useful when you're trying to remember these things, maybe to focus on extremities. You might remember that just prior to IPO, we would raise mezzanine finance to bridge a gap in time. The company needs capital to grow, but this round of capital, this last